What is going to happen to multifamily real estate in 2022? Probably the question I get asked really the most right now. Very, very important question. I mean, especially for me. I'm a full-time multifamily investor. I have hundreds of thousands of dollars typically invested per deal. On top of that, we have millions of dollars of investor capital into deals. And so this is a very important question. It's something I spent a lot of time considering, researching, listening to others. And so in this video, I want to share what I've been researching, what I've been hearing from other economists, multifamily investors, and share with you exactly what I foresee happening in 2022 into multifamily real estate and what you should do to prepare for what's coming this year. Let's roll. Hey, welcome. My name is Ellis Hammond. For those of you who don't know, my company is Simply Capital Group. My little girl in the background, she's going nuts today. She's excited about this video, clearly. We have purchased over $100 million of multifamily real estate in 2021 and the beginning of 2022, and we're going to continue to buy real estate in 2022. And for that reason, I have experience in multifamily real estate. I'm seeing a lot of deals. I'm seeing what's happening in markets. I'm listening to other multifamily investors. We run one of the largest faith-based multifamily real estate masterminds in the country. So I'm seeing a lot of data, I'm seeing a lot of information, and I want to share a couple key points for you about what's going to happen this year and what you can do to take advantage of it. One of the biggest things that has been brought to my attention in the last few months is this term real interest rates. And typically, right now, the federal government has interest rates somewhere above 3%, let's call it. However, with inflation at 7%, CPI came back at 7% in 2021. We don't know what it'll be in 2022, but I imagine it's going to be very high. That means that real interest rates are negative. If our interest is at 3%, the value of your dollar is losing by 7% because of inflation, that means the real interest rate on your money is negative. Simply means this: if your cash is sitting around and doing nothing, you are losing money. Why I think this is so significant for multifamily real estate is because there are a lot of people sitting on cash, and not just people like you and me, the retail investors, but institutional money from all over, right? Pension funds, all kind of stuff that they need to get their money into appreciating assets where the debt is fixed, so your debt stays the same, but your cash flow can continue to go up. And this is why I see one of the reasons for multifamily to boom in 2022 is because the need to place cash. Right now, cash is a liability and debt is an asset. Very important to understand. Debt is your friend moving into 2022, and so I see more people trying to figure out ways to secure debt, place on great real estate, and own in 2022. Second reason I see this happening, or multifamily booming in 2022, is the housing shortage. In fact, you can go, and I'm going to put this graph here, but the housing production has not kept pace with population growth really over the last 20 years. This is a chart I'll put in this thing from the whitehouse.gov, and essentially all you can see is that the trending line is going down in terms of the housing supply keeping up with population growth in America, meaning this: there is a massive shortage of new construction in houses in America. They're gonna go to rental properties. The demand for rental properties in America is not going anywhere anytime soon. In fact, you can make the case that it's only gonna go increase in demand. Let me read you just a couple notes from this same article I'm reading from the whitehouse.gov. It says that housing starts as a share of the population decreased by roughly 39% in the 15-year period from 2006 to June 2021. Researchers at Freddie Mac, one of the largest agency lenders in the country, have estimated the current shortage of homes is close to 3.8 million, up substantially from an estimated 2.5 million in 2018. So this is a great kind of macro data point for real estate investors, especially those of rental property, to see that there is clearly a demand for rental properties in America. And then lastly, my third point, why I see multifamily really booming in 2022 is just the massive amount of capital in the market. I mean, the federal government has printed more money in the last year than ever a period of time in history. Our money supply has gone up by 40%. There's a massive amount of capital in the market. There's a massive amount of money in savings accounts. I mean, funds have it. There's really no place to go find good yield. I mean, bonds are below 1, savings account are in the 0.0 something. So if someone's looking for yield, where do they go find that? Well, real estate has traditionally been one of the best asset classes, even in a low cap rate environment, which we find ourselves in. At least there is still yield to be had, right? Let's say you're buying at a 3 cap in a great market like Dallas, which is historically low for that market. But if you can increase rents because rents are going up 10 to 12% a year, and now your stabilized cap rate is 5 or 6%, that's great yield that you're not finding anywhere else in the market today or in a savings account today. All of this capital chasing yield, not to mention international markets with negative bond rates. You put your money, they're giving negative interest. I'm not even quite sure how that works, to be frank. And so it's got to go somewhere. U.S. real estate, backed by fixed debt, and one of the greatest economies in the world. It's a good place for it to find a home. We are very bullish, our outlook on multifamily in 2022. I still think you need to be careful, but I do think that cash is a liability and debt is an asset. Fixed long-term debt that's going to stay the same over time, that no matter what the economy is doing, you're back with enough cash flow to cover your debt. So this is what we're looking for. We're looking for great markets, great assets in those markets that is backed by fixed debt, that we can go and increase the income on the property so that our debt payment stays the same, our cash can continue to increase, we're paying down the principal on that debt, our equity is growing over time. 1, because we're paying off the debt, and 2, because we're in an appreciating market. So at Symphony, my company, we're very bullish on multifamily. We're going to continue to buy a lot of deals in 2022, as long as we can find them, because the challenge is so is everyone else. So if you're worried about interest rates, if you're worried about all this news and what that's going to do to real estate, definitely it's there. But I would say this, there's too many other factors in my mind and what I'm seeing that's really going to have a massive change in affecting prices in multifamily real estate in 2022. The biggest fear I have is sitting in cash and not taking advantage of the opportunity like this to be a part of an industry that everyone wants to be in, and a lot of cash is coming to right now. I hope this helps. If you want to see more videos like this, make sure you subscribe and leave a comment below. Be sure to think wealthy. Cheers, friends.